Good evening, ladies and gentlemen, and welcome to another webinar with Axis Mutual Fund. Before we get started, I'd just like to take a moment to thank you for all of your love and support. We do these sessions every week, every month to try and create more awareness amongst our investors as well as our prospects. So I would encourage you to like, share, and subscribe so that we get more and more folks like you, like yourself, and to learn all about investments with Axis. So let's get into the topic for today. The topic for today is Axis Momentum Fund. Now this is a very esoteric fund, so to say, because momentum as a strategy doesn't seem to be very easy for customers to understand. So to dispel a few fears around it, I have two experts here with me. So please meet Divya and Shikha from our product team. Divya comes with about 15 years of work experience in this space. Shikha similarly with about 10 years of experience in this space. So I think our panel is extremely astute to answer a few queries here from our customers. Before we get started, I would request folks to please add as many questions as you have in the comment box on YouTube, and we will take them live during the session, and let's get started.
Sure.
So Divya, before we get started on the topic, maybe if you could take a minute to explain context from how the equity markets are doing. We've seen the markets have been very volatile. There has been a slight correction, I think a quite welcome correction recently, and a weak recovery, and a few geopolitical jitters as well. So if you could help explain on the Indian context, and maybe Shikha can take the geopolitical context. Yep.
So from an Indian context, if I may say, the last 2 months have been tough for the equity markets. Some people welcome it because it was much anticipated. From our house view also, we have been, for quite a few months or quarters, been saying that equity valuations are at elevated levels. People could see some correction or expect some correction. And that is what has panned out recently. I think you could break it into global factors, domestic factors. You could break it down into fundamental factors and technical factors. So essentially, if you see, like I mentioned, Indian equity markets were at elevated levels. So some correction on that front. Earnings outlook or earnings for the second quarter came in muted. So there was an expectation that, okay, earnings are muted, so corrections are expected. Globally also we have seen some geopolitical issues or elections, and I think Shikha can throw more light on it. But having said that, in the near term, while we are seeing pain, I think there are no two ways about what one would expect about India's medium to long term growth story. So that still stands strong. So barring the near term volatility, I think we should stay put and hopefully invest more in these conditions.
So yeah, I completely agree with Divya on that. And if you look at the global market, so what is directing the global economies or the geopolitical scenarios, the US election outcome. And if you look at the Trump agenda, he talked about tariffs, imposing tariffs. He talked about taxations, reducing taxation for the corporates. He talked about America first, the geopolitical conditions. Just to start with, if it talks about tariff, it talked about putting 60% on China and rest of the economy at 10 to 20%. But let's be realistic. At this time, what we need to do is to ascertain the pace of it and the amount of it will impose. If you look at the current ones, it has imposed 10% on the China and 25% on Mexico and Canada. So this is largely an impact which China economy will have. We will see some slowdown there in that case. And because of that, we will also see some inflation being built up in the US economy. Overall, on a geopolitical concern, we believe that after the 1,000 days of Ukraine-Russia, this might help to end that war. And other Middle East countries might also cool down a bit on that post the Trump. So overall, it's good for India, one from the crude oil prospect, because that will come down. The crude oil inflation, if we talk about, so in earlier Trump era, also the inflation in the crude oil was very low compared to what it was later in Obama or Biden era. So comparatively, it looks like it's good for India in terms of even if China slowdown happens, even for the companies which are competing for the China plus in the segments, those companies can do well because of the tariff being imposed higher there. So, in short, I think I agree with Divya on the part that India stands strong. We have good macros here. Geopolitical concerns are also coming down, so crude will do well from here. So, overall, I think it's time to look at India and avoid the short-term volatility and actually look at the long-term growth.
Absolutely,
Story.
and I think it also abides by our house views of staying invested during tough times, right? And that's where wealth is
Absolutely,
actually
yeah.
created. Rupee cost averaging helps you, and that's why corpuses outperform, right?
Correct. Right.
So, thanks. I think so. With that context set, I see a few questions have already started flowing in. So let's get started. This customer asks us, there are a few myths around momentum investing. Can you help, sort of clear the air about what does momentum investing mean? And given that this is an active fund, what does it entail?
Okay, so I think before we get into the myths around momentum or momentum investing, it's essential that all of us have this understanding on momentum in place. It is a very simple concept, but at the same time it can be very complex also. But simply put, going back to our school days, if I may say so, we studied about Newton's first law, right? If you keep an object at still, it is assumed that it is going to be at still, right? But an object in motion is assumed to stay in motion. So essentially something in motion or growing in motion is what is momentum. And momentum investing is trying to pick the stocks that are already in motion, or simply put, that are winners in the market. So that is the idea behind momentum investing. And usually when you talk about momentum investing, some of the myths that people have in their mind is, momentum is just one kind of style of investing. There are different styles of investing, like say value or growth or quality. So why should I only look at one style of investing? But that is not the case. Momentum actually can pick different styles, because momentum is not biased on style. It will pick up whatever is working. So for example, if value is working, which is what was working in the last 3 years, momentum latched on to value stocks. When growth was working in 2018-2020, momentum latched on to growth stocks. So it is very agnostic to style. It will just latch on to the style that performs. Then people say that, oh, if it is momentum investing, is it investing only in small caps? But that is also not true. We have studied the momentum index, and we can see that momentum is not necessarily present only in the small cap segment, but large cap, mid cap, these also show momentum stocks and opportunities for momentum investing. So it's really a market cap agnostic also, sector agnostic also. And the myth that momentum in a bad market will perform very badly is also not true. In fact, in our product presentation, in our leaflets, we have highlighted that at times momentum tends to underperform the market, but there are also times when markets have fallen and momentum has not fallen as much.
Makes sense.
So those are some myths that we have attempted to correct, or tried to break in our presentation.
Right. All right. I think just for context, for the folks watching this, you can go to accessmf.com and you'll see a banner for Access Momentum Fund. You click it and you'll be able to download the presentation Divya was just referring to. You have collaterals, there's videos, you can consume all of those. Shikha, there's a couple of interesting questions. There's a few curveballs also. So let's ease into this, right? How does momentum investing strategy differ from the existing investments, existing funds that Access already has? Okay. So maybe if you could help understand in that context.
So I think I'll break it down into two parts. One, on the investment philosophy we have, which implies to all of the funds here except momentum. And two, I'll pick a few funds which I think can be confusing for a lot of investors there. To come to the first part of it, so Access is known for quality with growth, right? And that's been our philosophy, that's been our style altogether. So when I say quality with growth, it means you look at the fundamentals of the company, like you look at the ROE, you look at the free cash flows available, you look at the balance sheet, other parameters, you look at the ROA numbers, and how does the company grows. So overall, the idea is to look at the fundamentals of the company. If it qualifies under quality, is it growth in line with the multiple years growth, and you invest from a long-term visions. Like earlier we have invested, you invest for at least 2-3 years, with the vision that the company will generate or earn profit in those periods. Now, if I talk about the momentum as a style, it does not look at the fundamentals at all. What it talks about is very simple. If a stock's, like we explained it, if a stock is moving upward and it's expected to move upward, like it's a trend, like you can see in a 1 month, 3 month, 6 months trend that it's going upward, we believe that it will keep going upward, and you just latch on to that stock and then invest into it. And once you see a downward trend of price there, and then that's when you start moving out of it. So it's a pure pricing strategy which you use here. So that differentiates it from other funds, other investment philosophy which we have, because it does not talk about fundamentals, and we purely talk about long-term investing and fundamentals of the company in terms of quality of a company. Now, I think people can get confused with quant fund, which is also there with us, which is again a model-based fund which we have.
Right.
But quant talks about valuation, quant talks about quality with the GARB approach, wherein you consider the growth at a reasonable price. So again, it looks at the fundamentals of the companies there. So it's quite different from momentum. So one talks about fundamental, one talks about pricing trend, one talks about looking in the companies, it gets impacted by the results of the companies, it gets impacted by the PE of the company. Rather, it does not look at the pricing trend. Even if a stock is going like sideways and you believe that this is something that the fundamental is good and you like to invest, you go ahead with investing into it. But that does not happen with momentum. So it's a very different strategy which we are coming up with. The reason is, like Divya has also highlighted, that it piggyback to the one which is doing well, like quality, and if value is doing well, then it piggybacks to value. And what we have seen is the cycle being shortened in the recent years. So when earlier the cycles was quite longer, like 2 years, 3 years, now it has like 1.5 years, and even frequently we have seen that cycle changing. So those investors which are getting neutral of any style and wants just the movement in the market to be picked and generate returns out of it, that's where the momentum will play a role.
Right. So it's safe to assume that the portfolio turnover for this scheme will also be slightly higher. We'll churn it more often.
Yes. So for Axis Momentum Fund, what we are attempting to do is we have a model-based or a rule-based approach. So in the rule-based approach, what will happen is we will feed in our universe. So that will also mean that, companies where our analysts raise red flags, we will not look at those companies. Companies where we have confidence is what goes into the filter or into the model. Model will screen it for price trend, then score it on momentum. That's not where we leave the model. We also want to put in a risk management framework. So we have to adjust the weights for liquidity risk, for volatility risk, for sector constraints, stock constraints, and that's how the portfolio is built. So that is the whole idea of Axis Momentum Fund. And I think with that, what we will do with the model is essentially try to run the model at least once a month. In times of disruption, or say for example in period when there is a lot of volatility, or in times of COVID, the attempt would be to try and assess the market more frequently. So there is no hard-coded mandate that we can only run the model once a month. Right. We could do it more frequently also. Right. So that will entail that we will start reviewing or rebalancing the portfolio more frequently. So compared to a traditional or a conventional portfolio, this will definitely have higher churn.
All right, I think that sort of contextualizes it a lot, where we're essentially saying that while the portfolio is going to be model-based, but we're also going to add our special sauce, which is quality, right? Which, as you said, we filter out those stocks which we're not comfortable in.
Yes.
So I think that's something I think that should be noted, right? That is what we are known for as a fund house. So another interesting question: what are the top 3 benefits of investing in a momentum fund?
So I think the key idea of momentum investing, like Shikha was alluding to, it's a very, very differentiated strategy from what you see in conventional fund, is where fund managers, study the stocks, try to assess the stock, their growth potential, and there's a lot of emphasis on research. And here it is a very differentiated strategy because we are only looking at price trends. We're trying to look at the technical aspect rather than the fundamental aspect. So firstly, it gives you a very differentiated approach. Secondly, I think historically, even our back-tested model or the momentum index, or globally if you were to study momentum index, you will see these are usually strategies that give you high performance, so high return strategies. So that is a differentiated aspect. In a conventional portfolio, it complements your existing fund strategies, and of course it's an actively managed high churn portfolio. That again is a differentiating aspect for
very interesting, I think. So Shikha, this is a very interesting question. I think someone has used some chat GPT here. Can you help explain momentum investing to a 21-year-old investor? I think so. This person is a little young and is, I think, they're a little technical. So if you could ease it.
Okay.
Yeah.
If I have to explain it, like not a 21, in fact to a 12 years old kid, let's talk about it that way. So what do we do in market? So you look at a trend and you see a stock going up, okay, and then you see that stock is going up for a 1 month, that stock is going up for 2 months, that stock is going for 3 months. And then you see that there could be a reason behind it, but you're forgetting the reason, and what you're focusing on, that this price, this stock is getting that price trend of moving upwards, right? Like Divya gave a very good example of Newton's law. Something which is in motion will stay in motion. So we believe that a stock which is moving upwards in price will keep moving upwards until and unless there is some events that hit it off. So you try and piggy bank on that. So it means that when a stock start moving upward, you see the trend for some period of time, and then you start investing into it. Right. So you don't buy at the bottom, like a lot of ideas which people believe from fundamental perspective is to buy when the stock is not doing well or buy at the bottom. The idea here is no, we do not buy stock at the bottom. You buy stock when it's actually doing well, and buy it till the time it's actually showing some dips there. So either because of an event or because of any external factors, the trend moves downward. So now the stock has started falling and keep on falling, and like it went up and it keep on moving upward, it will keep on going downwards as well. Right. So then when the trend shows that it will keep on going downwards for some time, you exit here. So the idea is buy high and sell even at a higher price. Right. So it completely is disassociated with the idea of investing for a very long time, or investing looking at the fundamentals. You just look at the market, what is doing well, get into boat. If it's not doing well, just come out of that boat. It's as simple as that.
So just Siddharth, picking up from her, you know what the tagline we are using for our presentation or this? It is let those in form the portfolio. And we have used the caption of, or sorry, the visual of a cricketing team or cricket quite a bit in our presentation. That is because the idea is, if you were to form your cricket team today, you will pick those players who are in form, right? That is what we are trying to do in the momentum strategy also. If we are trying to build a momentum portfolio, those stocks that are performing is what we want in our portfolio.
That's a very interesting analogy. I think that should drive home the point. I think there's another couple of interesting questions here. So I think this one's for you, Divya. In the current market context, is it suitable for momentum investing? What if the markets were to remain volatile? Will it hamper a momentum strategy?
Okay, this is a question that we have been getting quite often now, given that markets are in turmoil. And I mean, it's a valid point, right? Why should I invest now? Why should I invest in momentum strategy? The whole idea of momentum strategy is not to time the market. Even in a downward trending market, because this is an actively managed fund, and it's very important that I bring out this point that this is an actively managed fund. So what it will do is try to actively look for stocks that are falling less. So that is where momentum will try to identify stocks. It's not that we can only identify stocks that are rising, but even in a downward trending market, stocks that are falling less, stocks that are low volatile, which typically tend to do well in a bear cycle, these are the stocks that will come up in our filter, in our model, and that is how the portfolio also will be built. And because it's actively managed, we are not tied down to a specific set of portfolio for like say 6 months, which is the case in a passive fund. But this would be more active in looking for opportunities and building the portfolio. So even if say markets were to go nowhere or markets were to fall, you need not shy away from momentum strategy. In fact, 2 months ago, the kind of valuation you were getting from there, we have come off. So technically it is a better point of entry today than say 2 months ago. So I think no need to shy away from this strategy.
I think that's a great time. These are opportunities where people are looking for opportunity to enter the market, and this may be one such opportunity.
Yes, absolutely.
And just to add to that, I think this was much anticipated and needed correction in the market, and that's what I think everyone is talking about. How long it will last, it depends on the multiple factors, but is any time a bad time to invest in market? The answer is no. It's about what is your vision and what is your goals towards it, how is your risk appetite, how long you are investing. That depends on where you come into the picture.
Correct. So if you have a longer investment horizon, then you need not really time the market, especially now that markets have corrected, good time to enter.
Right, and I think there is a question exactly on this line. So this, I think the gentleman asked, what if I'm not willing to invest now and I'm waiting for a sharper correction? Do you think it's better to wait, or should I go ahead?
So that is not something I can predict. Can you predict?
No, so idea is what happens, there is no sharper correction. Then you will say you lost the opportunity.
Absolutely.
Right?
Yeah.
But in case, even if there is a sharper correction, the market will cover up given how the India is placed right now, we will cover up in some time. So please come in with a longer term vision, come in for at least 3 to 5 years, and then you will not look back and say, oh, I should have waited or I should not have waited. If you have surplus lying with you, definitely come in with a longer term vision.
Right. And I think this is something similar to what you alluded to, Shikha, and I think the customer asks us, how does this differ from quant or value fund that we offer? Given I think someone has caught on to the fact that even those are rule based, those are also model dependent. So how does this differ, or is it a similar strategy?
Okay. So quant, I think we addressed it. I'll just cover up a bit on that. The quant fund is based on valuation, growth and quality. So we call it a QCARP approach. So again, it looks at fundamental, it looks at the PE of the ratios, it looks at buying a good stock, good growth stock, but considering the PE is not very high. This is the idea of a QCARP, which is the quant fund for us. Whereas momentum, like we have talked about, it's all about picking up the price trend and taking advantages of upward movement in the price. And if I have to talk about value, I think nothing much to be confused with value, because value, like quality, is a style. Okay, and it's not a model based. Rather, if you look at the Access Value Fund therein we say that we look at the opportunities of turnaround in the management. It doesn't mean that stock is doing well and I'm investing. Rather, I'm saying if the stock is not doing well, but we expect some turnaround in the management, or we expect some change in the policies, or some turnaround in the company, or the economic cycle of the sector is supposed to be turning around. That's when you call that a value stock and you start investing into it. So it's completely fundamental, and it's a fund manager's call. How do he look at that particular stock or a company? So value is a style, quality is a style, and a momentum is a style. The 3 different styles. The good advantage which the momentum has it, whichever is working at this point in time in the market, you will see higher correlation with that style. Like from 2012 to 15, correct me if I'm wrong, Divya, but that was a time when the quality did very well. So you will see, if you run the backtrend model, you will see higher correlation with the quality. And last 2 years back, when the value was doing very well, you will see higher correlation with the value. So this is style neutral, like Divya said, market cap neutral, very neutral style, focusing on the pricing trend in the market.
All right. Interesting. Divya, do you want to add anything on that?
No, I think, the key takeaway for me is that please don't get confused between the other traditional offering. So you have large cap, mid cap, small cap offerings, you have different various sectoral or thematic offering. Those are all, lot of it is based on a fundamental approach and fund manager views. Fund managers have their biases.
Right.
They buy the stock, even if stock is not performing, they hold on to the stock because they know that maybe the next 3 months may not perform, but 6 months, 1 year, 3 year, there is a story for it, and they hold on to that. But momentum as a strategy is not married to any style or anything, not married to any stock, sector, style, market cap. Whatever performs, it will latch on to that. So that's how very different a momentum strategy is.
That's very interesting. I think you did allude to this in your starting comments. So I think one gentleman wants to know, can you shed some light on the performance of this model over the last 20 years? I think Shikha also mentioned that we backtested it. So
Yeah.
and it was something we mentioned in one of our presentations.
Correct. So because this is a model-based approach, what we did is we did the backtesting of the model with the same set of filters and risk constraints that we would want to apply going forward also. And we have a history of around 15 years of backtesting. And 12 out of 15 years, it has managed to outperform the diversified Nifty 500 benchmark index. And roughly to the tune of 6.5% of alpha on a gross level is what we have seen on the backtesting basis. So the point, and if you could go back to the presentation, you would see those slides on backtesting, and you will see that it's not that it has outperformed every year. There have been 3 years in this 15 years where it has underperformed also. But the idea is over a long term investment horizon, which is what we are trying to say, that for a long term investment, if you are staying put, it has the potential to generate higher returns.
And how did the strategy perform in the shocks that we've seen? So the subprime crisis, or through the pandemic, or through, say, the wars that we're seeing in the Middle East, etc. So how has it done?
So we have a slide on drawdowns also. We try to assess how the drawdowns are. So the myth that I was saying, when the markets correct, the momentum strategy corrects significantly, we see that that's not the case. There have been times when it has corrected higher than markets have corrected. There have been times when it has corrected less than markets. So for example, in COVID, if you look at the momentum index, you will see that momentum index fell less than Nifty 500.
Right.
So there are instances where it could go either ways. Overall, when we study our models backtesting, we saw that it has seen a lower maximum drawdown than Nifty 500.
Okay. Thank you for that. I think so. We're running a little short on time, and the questions just keep flowing in. So maybe we'll do one question odd and then probably go from there.
Sure.
So let's start with Divya. I think you briefly touched upon this, that that this is going to be an actively managed fund. We are going to churn this portfolio, going to run the model every month. So what do we anticipate the market cap split to be? So what does the current the model tell us?
Okay, so there is no point on us speaking about the current market cap allocation that the fund may look at, because it will clearly depend on when we start allocating the fund and how the markets are. Like I said, unlike a multi-cap strategy, which is by mandate supposed to invest 25 in large, mid and small, this has no bias at all. It can go anywhere. At that point in time when we are constructing the portfolio, what the model throws up, that's how the portfolio will be. Okay. So it could be, supposing at that point in time large caps are the ones that are performing, so it could be skewed to large cap. If at that point in time large caps are the ones who are underperforming, it would have a higher tilt towards mid cap or small cap. So it's completely agnostic. Investors have to be ready to see the agility and adaptability of this fund, and be open to access to all the three market caps.
And by virtue of this, do you also think we will have, say, a higher investment in this fund, say in stocks, for example, like say a Swiggy or a Zomato or an Ola, given that those are trending nowadays, people are talking about them, they're always in the news for the right or the wrong reasons. Do you think those sort of strategies can be?
See, it's difficult to say. If they are coming up in our filter in terms of momentum score, if they have been performing on our price 10 parameters, then they will definitely come up in our filter. But like I said, I am agnostic to the names that come up, as long as they are part of my good company, confident company universe. They will get into the model, and the model will throw up the result.
All right. And I think, Shikha, last question for you. Does this scheme also plan to expand beyond Indian markets? Do we have a mandate here at all to go beyond India?
So honestly, Indian market at this point, very attractive, and the depth in the market is increasing. Though we have seen the trend with the new funds that they are provisioned to have foreign exposure there. But for this strategy, I think we will stick to the Indian market, capture the momentum here, because I think large part of the opportunities lie in here. But yes, we have different funds because in foreign markets, I think if you want to look at foreign markets, there are other funds which we offer, like there is growth opportunities, which is at least 30%. The mandate is having 30% in the foreign equities, depending on the fund manager's view. Then we have innovation fund. Then we have ESG funds. Those are the funds wherein you actively pick those stocks from the foreign market which are expected to do well, and then you bring them into the portfolio. But here we are trying to capture the momentum which are happening in the Indian markets. However, the style when we test in the global markets, because this have been working in the global markets for quite some time now, so there it has been a very successful style, and as the Indian market is maturing and developing further, we believe the same style will do wonders in the Indian market as well.
Right, so I think just to summarize, we as always, like we've been iterating for the last few years, we are invested in the India growth story or the Bharat growth story.
Exactly, yeah.
Right, and I think we're extremely bullish on India. So I think with that, we thank you for your patience for joining in. I see there is still a lot of questions that we have unfortunately not been able to answer. I request you to go to our website accessmf.com and go to the product page. There is a form, you may fill up your details there and reach out to us. We will get back to you. We're happy to answer as many questions as queries that you need. So feel free to reach out to us on our website. You can download our app. We're available on the Android and on the iOS platforms. You can follow us across social media, across Facebook, Twitter, Instagram and Telegram. So feel free to reach out, and we're always here to help you. So with that, I'd like to thank Divya and Shikha.
Thank you so much.
Thank you for your time this evening. Any closing comments?
I think this, like we have been harping a lot, is a very differentiated strategy. Of course, it comes with potential of high returns, albeit it has volatility as a risk. So any investor looking at this portfolio needs to understand that he needs to come with a longer investment horizon. Obviously, this is an equity fund, but unlike a traditional equity fund, this may have a higher risk profile. So you need to understand that. Have a smaller allocation or have it as part of your satellite allocation. I don't think you need to be much frustrated or worried or flustered about where the current market conditions are. In fact, I look at an opportunity to invest at lower valuation. But of course, with the right risk appetite, with the right investment horizon, it can be a good addition to or complement your traditional conventional portfolio.
Shikha, how about you?
I think I just agree with Divya has covered large part of it. And what I'll tell investors is, see, you already have a lot of traditional stocks. You might have some large cap already. A lot of, I think, allocation might have moved now to mid and small cap allocations. Look at it as a different diversification of your own portfolio, wherein you have large, mid and small cap. You have some quality oriented funds. You have some value oriented funds. Have a agnostic fund to those. And you will see that in any kind of market, one of the style will definitely work, where the momentum is trying to capture both quality and value good times. But over a period, you will see that when the market is down, this could be the fund which is trying to capture only good stocks. So create a diversification to your portfolio, and like Divya said, don't be worried about the short-term volatility in the market. Investing and wealth creation is all about long term. Like even if you look at the investments which are done 10 years back or 15 years back, you can't compare with the returns which they have generated, because the short term volatility will not even give a small percentage dip in the long term returns itself. So for your wealth creation, don't think of the small dips in the market. Take the opportunity and invest in the diversified funds so that your portfolio is much more diversified and it does not get impacted by short-term volatility. And thank you and happy investing.
Thank you
so much.
everyone. Thank you for tuning in. Please remember to stay invested, and we hope for good times at the markets ahead.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.